Obviously, the approval of the US Bitcoin ETFs has been amazing. It's the best-selling product, I think, in BlackRock, Fidelity, like the whole asset manager space for ETFs in their history. So they're loving the fees, all the AUM inflows. And obviously, we're seeing on a daily basis a few $100 million of new fiat being pumped into the crypto ecosystem, which has obviously led for the prices to rise. So I think that's probably the big macro trend. Obviously, you have the halving. Everyone likes to look at the past cycles and divine how it's going to be exactly the same, but obviously every cycle is different. This is the main narrative of this cycle is sort of the addition of a Bitcoin derivative that institutional investors globally can invest in. And so we're really tied to those flows in terms of how the price action is going to eventuate. And I think halving sort of takes a second step to that, and maybe it'll be a lot more pronounced in terms of its impact 3, 6, 9 months down the road. But I would say that we're primarily focused on what are those daily flows out of the US. Obviously, Hong Kong has approved its own spot Bitcoin ETFs, and those should be launched sometime soon. So, in Europe, UK, everyone's trying to get out on this fee game in terms of a TradFi asset manager. So I think that's the trend, having a sort of a second fiddle this cycle. We're in a great time. It's time to, strap it on, go long, forget about it for a while. Don't get too intellectual about things. All the alts are going to rally. The question for an investor is picking the one that resonates with you the most, being concentrated in your bets so that you're making the most amount of money given this particular point in time that you can.
In a recent interview, BitMEX CEO Arthur Hayes provided his updated outlook on the current cycle following the Bitcoin halving. With the approval of the spot Bitcoin ETFs, the crypto market has attracted new investors, increasing the demand for Bitcoin and other altcoins. Hayes suggests that the period following the halving will be a favorable time, requiring less concern, as Bitcoin and other cryptocurrency assets are expected to experience a rally. While Hayes maintains his bullish outlook, he also acknowledges the possibility of price corrections in the market, as many investors are currently driven by all the exciting news. Nevertheless, the CEO believes that global markets are transitioning from TradFi to DeFi, as to him, the bond market is gradually collapsing. Let us now watch Arthur Hayes as he shares his updated outlook, including which assets we should invest in for this cycle. While watching, please give this video a thumbs up, subscribe to the channel, and enable post notifications for more similar content. Make sure to stay until the end of the video as Hayes explains why he believes that Bitcoin and crypto in general are here to stay, despite all odds. Thanks, and enjoy.
Obviously, Solana's the hot kid on the block this cycle. And we're seeing that their TPS numbers are completely bullshit, which is fine. I mean, that's just a function of them being successful at attracting a meme coin degenerate trading crowd, and they want to all trade on Solana. Does that mean that Solana is going to flip ETH in terms of market cap? I don't think so. But again, as you said, as the Bitcoin price rises, everybody feels wealthier. Then they get into all these sort of, different sorts of alts. Obviously, I've been pushing this narrative like AI coins. I've been, a big Filecoin believer, but there's other ones out there as well. Like Tau and BitTensor has done very, very well. You've got, I think, IO.net as a big airdrop or launch that people are like FOMOing about. So there's all these different sort of narratives. And then you have all the different new L1, L2s that are launching this cycle. So again, all the alts are going to rally. The question for an investor is picking the one that resonates with you the most, being concentrated in your bets so that you're making the most amount of money given this particular point in time that you can, because obviously most of these things are completely dog shit and bullshit, and they're not going to live up to what they said they're going to do on their nice looking pitch deck. And so you want to be well clear of this shit when the market starts sort of rolling over, when people start asking the question of, oh, well, let me see all those users. Let me actually measure the TPS versus what you told me about, 2 years ago when I invested in this thing. How many AIs have actually used in this? Of how much data have you actually put on the chain versus what I thought 2 years ago? So when you start asking those questions, you want to be well clear of most of this shit. Even the good stuff is going to get smoked. So we're in a great time. It's time to, strap it on, go long, forget about it for a while. Don't get too intellectual about things. We'll see. Who knows? It's got to be fun. It's going to be fun. It's got to be degen. It's not fuck professional, all that bullshit. If it's not fun, if you're not doing it because you don't care if you lose all your money, but it's how you're having fun, then it's not going to drive any sort of attention. Because Bitcoin has a very good value prop. Bitcoin is crypto money. It's the hardest money in crypto. And so I know people are like, oh no, Bitcoin doesn't do anything. That's the fucking point. And so the conservative nature of Bitcoin is its biggest asset. So I'm not really that fussed that, okay, maybe, meme coins can or can't come to Bitcoin, or DeFi can or cannot come to Bitcoin, or whatever. As long as we keep being the best money that's ever been created, then we're doing our job. I mean, I think you don't want to invest in anything that's like an application on top of some sort of like open source model. Like, you want to invest in sort of a AI infrastructure, whether that's compute power, storage, chips. And so all the really successful narratives in crypto are like, oh, we're going to create a decentralized network of people providing compute power, or we're going to create a decentralized network of people data storage for AI. That's the sort of stuff you want to get involved in, because then they don't have to pick a winner. It's like, how many startups is OpenAI or Anthropic going to put out of business because they just decide to do that same service themselves in-house? And we're already seeing that was, a lot of VC Silicon Valley startups just being zeros immediately once OpenAI decides, okay, we'd like to do that too. Cool. We have better distribution. We have the model, and we can completely disintermediate you. So I think you want to, as I like to say, focus on the AI food groups, compute power, and storage. Any sort of coins related around that, it's very easy to build a very convincing narrative around those. There's no such thing as like a permanent plateau, right? I'm not fucking Irving Fisher in 1929 thinking that stocks are never going to go down, right? That's just dumb. Stuff goes up and down. We're humans. We overpromise a future, and then it gets there and it's kind of like blah, 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 right? So I think maybe the cycle is just longer and the upside is just higher, but there will be an 85-90% drawdown in crypto. I am very confident in that. Sell the news. But again, you could be wrong. Most people are already invested. So it's not as if it's like, let's go short Bitcoin. It's, hey, I'm going to hold off and maybe I'll allocate more a week, 2 weeks, a few months after the halving. I think that's probably just going to be very boring. And we're entering the summer. People could be on vacation. So I think we're entering that low volatility, boring period, and sort of the halving sort of just starts that period.
A quick news update before we proceed with more of Arthur Hayes' bold predictions for this cycle. JP Morgan suggests that the recent weakness in mining stocks ahead of the Bitcoin halving presents an appealing opportunity for investors. The total market cap of US-listed Bitcoin miners declined by 28% from March 31st to April 15th, with all stocks underperforming Bitcoin and experiencing losses of at least 20%. Despite Bitcoin's 43% year-to-date gain and 130% surge in the last 6 months, the report highlights a portion of the post-halving rally potentially being pulled forward. Analysts anticipate heightened volatility and trading volume in both Bitcoin and mining stocks surrounding the halving, noting lower mining profitability in early April as network hash rate growth outpaced Bitcoin price appreciation. Let us now return to Arthur Hayes on why he remains bullish despite his predicted price corrections.
I think that we might be in a more elongated cycle because we're crescendoing into a collapse of the sovereign bond market, or a belief that there's something better to own than a treasury, a bund, a JGB, or whatever. Well, I mean, I think just look at why are institutional investors investing in Bitcoin? Because there's a whole narrative about the destruction of the sovereign bond market, which started basically as the Fed started raising rates in March of 2022. So there's a reason why people are allocating to Bitcoin, not just that Bitcoin exists, and so therefore I will allocate however many billions have gone into these products. There's an actual underlying issue with the markets that's propelling this. So if you take away the Bitcoin ETF, it was still pending, I think we wouldn't be at an all-time time, maybe at 50,000 or 45,000, whatever it is. But we've rallied off of 16,000 after the FTX collapse, and that's all predicated on a lot of money printing from the Fed, the BOJ, ECB, PBOC, all the major culprits in this fiat debasement orgy that's going on globally. And now institutional investors have a way to say, okay, I'm not just going to sell my bonds. Now I have something else to invest in that's not GLD. And that's why you have all these inflows. It's not just that Bitcoin's here and therefore I will allocate. There's an underlying economic tension there. I mean, I've come out pretty strongly saying that taken to the extreme, that passive investing, and we've seen this in traditional equity markets, is toxic to price discovery. And so we'll see how large these asset managers get in terms of the percentage holding of Bitcoin and maybe some other cryptos and shitcoins as well, and whether their passivity and their non-engagement with the actual underlying protocols and what we're here to do, which is, create a whole new financial system, does that detract from achieving that goal or not? So I think the jury is still out. I don't know what percentage of the network, so total supply that BlackRock and Co. owns, well, at 1% or something like that. We're well far away from any sort of like doomsday scenario, but it's definitely there. We might not adhere to this 4-year cycle because I think we're in the moment where the global investor class and the proletariat loses faith in this thing called Keynesian economics and deficit financing. And so if we have a revolt of the bond market saying, fuck, I don't want to own JGBs, treasuries, bunds, all these bonds of these bankrupt governments, and here's this digital alternative, we could see a very explosive upside cycle. And then maybe if we throw all the baby boomers out of power around the world, the younger generation's like, well, why am I paying for healthcare for a bunch of Muppets? Let's reorganize the system, and then we might see some more responsible governance in terms of spending. And then at that point, maybe a government bond is a better bet than owning Bitcoin on a forward-looking basis. So I think things can change. We obviously think that the same crop of idiots who run the world are going to continue doing so, and the same sort of deficit financing policies are going to prevail for the foreseeable future. But that's not going to be the case in 5 years' time. Things are different. So I think that would be my caveat to the super cycle. And I hope the more people who say super cycle, the more I'll be ready to start dumping bags. The Fed and the Treasury, at least in the U.S. perspective, are net stimulative, and because the stock of U.S. debt is so high, and all these other Fed programs that they have, reverse repos, interest on excess reserves, taken together, they've been stimulative for a while, because as they raise rates, they pay more interest out to banks and wealthy individuals who spend that money into the economy, right? And so I think the focus on whether it's 2 or 3 rate cuts or maybe it's 0 is irrelevant, because the Fed and the Treasury are already printing money. The more they raise rates, if they do that, they print money. They cut rates, juice the markets. Essentially, it's stimulative as well. And so it doesn't really matter what they do, unless the U.S. is going to declare some debt jubilee and just extinguish all the debt. The net effect is stimulative. There's more liquidity in the system, and so I think parsing Powell's statements on debt dependent and 1/10 of CPI here and another 10th of CPI there is fucking just mind-bendingly boring and dumb, because it doesn't matter. Like Bitcoin's going to go up whether the Fed cuts 2 or 3 times, if they even cut at all. There's some people who are saying that they're going to reduce the pace of quantitative tightening by, I don't know, $30 billion per month or something around that. And they'll announce it at the May meeting. Again, at the end of the day, they have so many ways to print money that isn't the quantitative easing that everyone understands from 2008, that it doesn't really matter. Ultimately, it doesn't matter who wins the election. Like, they're going to print money to hand it out to whoever their constituents are. Trump wants to do tax cuts, Biden has green energy or whatever, right? So it doesn't really matter. It's a fun little circus that everyone gets to watch about 2 old dudes fighting it out in the media. But other than that, it's irrelevant. I think that if they were going to ban it, they would try to do it already. They've done it already. My base case is look at China. In China, Bitcoin is not illegal. It's not illegal to hold Bitcoin. It's illegal to do a lot of things in China. Obviously, very controlling sort of policies that they run over there, but they have not deemed Bitcoin illegal, because I think they know it's very good advertising when you make something illegal that you can't actually enforce in a broad sense, right? Individually, yes. Police can go over to your house and put a hammer, put an M16 to your head and say, give me the private keys to, a few different individuals. But like on a broad scale, it's very hard to enforce a ban on private ownership of Bitcoin, which is different than something that's in gold, right? Because in 1933, FDR in the US banned private ownership of gold. Very easy to enforce that policy because gold's fucking heavy, and it's very easy to find somebody who's storing a lot of gold versus a private key that's held in your head.
Do you agree with Arthur Hayes' insights? What is your outlook for the current cycle following the Bitcoin halving? Share your thoughts in the comments section. If you found today's video informative and would like to receive more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Be sure to stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we look forward to seeing you in the next video.